Good morning, pro traders. Hope you guys had a fabulous weekend and are raring to go for the trading week ahead. So just to start off with a brief recap of last week, I think that if you weren't managing risk carefully across your instruments, it would have been a bit of a brutal week come Wednesday, although it started off very nicely. So the end of the boot camp week going into the start of last week was fine. But we had some significant reversal activity on Wednesday. And I think it goes to prove the point as well that if you are overexposed to any particular currency, it can get quite painful. There is a flip side to that, of course, which is when markets keep roaring ahead, where you can make a lot of money in a short space of time, which is what happened to us, certainly, when we had big market events such as when COVID hit last year. But more often than not, these moves run out of steam quicker rather than carrying on for a week or two. So it's very important that you manage your downside. And again, it comes back to your risk appetite. So if you are more aggressive in terms of your risk appetite, then you won't mind the additional volatility that brings to your equity curve. Because if you, I think one or two folks last week risking 1% per trade had a drawdown of around 10%. But, in a good time, doing exactly the same thing, you could make 30, 40%. So convexity at work, as always. But if you can't stomach those kind of sudden drawdowns and setbacks, then you need to recognize that maybe your approach isn't suitable for your risk appetite. So, but all in all, there's still some activity showing. It's much quieter than what we had at the start of last week, and we need to recognize, as always, in our technical analysis, when to pull back from a market and when it's appropriate to do that, and when the conditions are appropriate for one strategy versus another, as always. Okay, so starting with the Euro USD, you can see that here on the daily time frame that we've had a pretty dead time for, well, more than a week now. It made a lower low, but it's been very reticent, if you like, to find any real directional bias here. And that's also visible in this wave on the weekly time frame, where you can see that we haven't had an impulse candle now. In fact, in this entire wave, we only had the one impulse candle, which was that long bearish candle. Every other candle here has not been an impulse candle. So that is a sign of the poor quality of the wave, which is reflected by the weakness in this trend. So technically, this trend has been intact. Of course, today, if we were to get a candle closing pretty much as it is now, and I'm not saying it will, but if it did, then that would represent the end of this trend, because then we would have a corrective wave followed by a corrective wave and breakdown and sequentiality of cyclicity, and that would be that. So that may well happen at the end of the day, but let's not jump the gun. All right. So on the cable, looking at weekly time frame first, you'll see last week's candle, also representative of that sudden turnaround during the course of last week, really was just a load test on this ghost support level, which is going to be the bottom of our 13 candle 4-wave channel. As soon as we get another isolated low here, we'll be able to update that. But at the moment, it's down here, and that means that regardless, we are still very much inside of the channel, and it seems to be finding significant support over here. On the daily time frame, we did have that bearish breakout, and this is an example of that rather sudden turnaround that we had through the course of last week, following the narrative bias. And like everybody else does, we could say that that's because the stock markets were initially sold off due to the Delta variant on COVID, but very quickly people found that that wasn't sufficient cause and bought back. If you look at the S&P 500, subsequently it made a new all-time high after a sell-off at the beginning of the week. So just goes to show why we are so aggressive about limiting downside first and foremost. In any case, it did pull back into our channel again. So a bit of a pity, because now we don't have, from a channel point of view, we don't have an outside C close. But if you are a WM trader, then of course this does count as a potentially valid M pattern, and you may be looking at a breakdown for that breakdown and sequentiality of cyclicity on the 4-hour time frame, which we've actually already had. But if you're trading a hybrid approach here, then you would not yet have had your final entry criteria with an impulse candle on that time frame. So bear in mind, though, just for trading H4 impulse, we can't do anything here if you are a standard channel trader, because we did pull back inside of that channel. There are a couple of other pairs, though, where that did not happen, where we did stay outside of the channel. All right, dollar yen, similar thing. You know, we had seen that previous marginal breakout here. I think we discussed actually 1, 2, 3, 4, 5. That was in fact last week, Monday, but also subsequently pulled straight back inside of the channel. So it did give us an initial breakout, but on Friday we did get the higher close. So phase one breakdown and sequentiality of cyclicity. So that's already confirmed as a false breakout. We did have a little overlay over here, which didn't, however, work out. So from the point of view of trading our core strategies, nothing doing at all here on that time frame. And of course, on the weekly time frame, although we did get that marginal bullish breakout over here, we are deep inside of the channel. So not interested in anything here at all. Moving on to Usd Swiss, so nothing on daily, of course, deep inside of the channel, and likewise here on weekly. If you're a WM trader, then we did get last week's candle ringing the preceding week's low. It does mean that you have a valid W pattern for the moment. And of course, that was represented by the breakdown in bearish cyclicity here on daily, which is now looking a little, well, it was looking a bit more bullish. But if today, of course, we get this high ringed, not only will we have failed to have gotten our final selection criteria, at the end of the day, it also represents the fact that this is just going sideways on this time frame. So that's why we have these final selection criteria as a kind of a confirmation. Not that we're trying to predict anything, because you can't, not meaningfully anyway. Right, USD Cad. We also saw this resistance level here being tested through the course of last week, again with another pretty vicious turnaround, which is visible here on daily time frame, also coming back and closing inside of the channel. So trend, yes, it is intact. If you're a WM trader and ignoring the channel boundary, it is valid. And also we have had this low ringed, so you may well be dropping down to the H4 time frame if you are that aggressive. However, if you're a channel trader and you're not worried about the outside C close, we do need to get the close outside of the channel before you can do anything with that. Just having a quick look here on the 4-hour time frame, you'll see that it's still very, very flat. So the gradual upwards movement, but certainly Thursday into Friday, nothing happened here at all. We did have a nice little winner on the overlay, though, when we saw the end of that bullish wave, that bullish impulse wave. In fact, the overlay, for those of you who started trading it, you might have found last week was a pretty good week for that. Okay, Aussie USD. So this is an example where we have everything intact. You'll see this trader, I think this trade is probably an H4 impulse, but if you because we don't yet have the bearish impulse candle for daily, but regardless of that, we need to just double check. Yeah, so here on weekly, we are still absolutely fine in terms of an impulse wave outside of the range, which means we are trending and have been for some time now. We've had 2 impulse candles in a row. Yes, last week's candle was a bit of a low test, and that, of course, is represented also by that bit of a turnaround that we had on Wednesday. However, it respected this resistance level, so it didn't go back inside of the channel. And then on Friday, we just dropped down to the 4-hour time frame. And I'm just following up here, guys, as well, for those of you on the bootcamp, with some additional analysis, looking at the multi-time frame approach. Hope you find that useful. Where we did see this breakdown in bullish cyclicity on H4, representing the end of that bullish wave on the daily. And this trader, well done to you, saw that. This is a hybrid trade, and obviously jumped in this morning. This would be yeah, at the open of this candle, yes, you are using the trade manager. Well done. So this is just after the start of trading. This trade would have taken place probably after 11 p.m. Central African time, sometime last night. Using the trade manager, place the trade. This is on the hybrid approach, and you can see it's doing reasonably well. And in fact, you should be able to trail the stop on this already. So it's looking very nice. But obviously, that's the advantage when it does work out of using a hybrid approach. It gets you in a bit quicker. Whereas if you are trading the standard H4 impulse, then obviously we're just waiting for that high to be ringed at the close of day today. So that's an example of what we were talking about in the bootcamp. Right, Kiwi, you can see here on daily, again, just tested slightly outside of that range, but it's very much inside again. And you'll see even here on the weekly time frame, we've had multiple load tests where it's continuing to respect the support area over here. And last week did the same thing. So this is definitely not a pair that we have been trading. I should just point out for those of you who want me, I'm not going to make a habit of pointing out all of the overlays, but there was one over here just to point that out. In fact, there were two. The first one is on the more aggressive approach, which was just a small winner. In fact, they were both just small winners over here. So once the full training for the overlay comes out, for those of you who weren't on the bootcamp, it'll become clearer. All right, so Euro Yen, here we had that similar picture as to what we saw in a couple of the others where it's, we did get the continuation of our previous trend, looking very nice, in fact, but it pulled back again last week into the range. So this breakout over here is still technically intact, so we need to wait and see what happens here. We haven't had that high ringed as yet. Maybe we'll get that today. I don't know. But if it does and it comes back outside of the channel, as long as you don't, as long as you're not requiring the outside C close, you can potentially start looking to short this on the lower time frames as well. So just pointing out that we are still technically in a bullish trend on this, but as I mentioned last week, it is very, very borderline. Last week did respect the support level, but you know, if we do get a lower close here, that would be the end of this trend. Technically, then it would be a false breakout that took place over like 4 months or so. But yeah, I mean, on the daily time frame, let's see what happens over here. It's still certainly bearish on daily, but we just need to make sure all of our criteria are met. Okay, Gbp Yen, same kind of picture. You know, we bearish breakout, strong reversal, and came back inside of the channel. There's no valid potential M pattern here either. So this is something that you're probably going to stay away with unless we get the continuation and it comes outside of the channel. And even then, it's not an outside C close. So it's a bit more aggressive. Right, Swiss yen, nothing doing. It respected the support level once again. So still very much inside of the channel. You know, if we were to just ghost our H4, I beg your pardon, our 4-wave channel, then you'll see that the ghost, leading ghost boundary basically will come down to here. Which means that pretty soon our support level is going to be there and the top of the channel is going to be there. So it's catching up. Looks like that's much more valid in any case. Cad Yen, another one of those pictures. Just looking weekly as well across the yen pairs. Most of these have come back inside of their channel. Bearing in mind that on weekly, most of it's bullish, whereas on daily, most of it's bearish. In any case, so this is also not going to be a valid M pattern. Back inside of the channel, just a quick look that we did have another little overlay winner there when we saw that reversal. For those of you who are not yet fully up to speed on these things like overlay and so on, please be patient. We will get the training out for that in the future. We just gave some initial training to the folks who are on the bootcamp, so I am talking about it, but the full training for that will come out in the future. And of course, if you're still finding yourself getting to grips with the impulse strategies, as I've mentioned to a few of you, then please do just focus on those. This is the next step, basically, once you've got that under the belt, when we talk about hybrid and overlays. All right. So this one also just came back inside of the channel on Aussie Yen. The general Aussie weakness, which we also saw on Aussie USD, almost carried through here. But unfortunately, on Friday, we did just get that inside close. But you can see it's rolling over again. So this is certainly something that potentially you'd be interested in trading if the candle were to close something like this. So it does look like today we're getting some continuation from that previous market directional bias that came to an end on Wednesday. Looks like today things might be hotting up again. Remember, you just follow the rules. We're not predicting what's going to happen, whether it's going to be a continuation or not. We just follow our rules, and we always look to limit downside. And then obviously after that, we look to maximize upside. Here on the 4-hour time frame, we saw a short continuation of this bullish cyclicity, which is now definitely rolled over. Phase one, looking very bearish. If you wanted to trade a hybrid on this, remember you need to get a phase 2 first, followed by that bearish impulse candle. And obviously for daily impulse, you just wait for that candle to close so that tomorrow your conditions will be met. Here on Kiwi Yen, again, the relative strength of the New Zealand dollar compared to the Aussie showing itself, because it really hasn't given us anything. And that reversal last week, we didn't even get a close outside of our channel. It was borderline, but it didn't. So back inside of the channel, nothing doing there. And just to confirm as well, that on a weekly, very much inside of the channel. So not interested in that at all. I do know some of you are trading the M pattern on this. Just to bear in mind that the highest closes in the B to C wave here did actually encroach on point X, just to remind you that it needs to be outside of X. All right, so Euro GBP, another example of that big turnaround. It was a bullish breakout. Didn't really give us much, I don't think, if you were looking to trade it. This was a nice fat winner on the overlay. And a very easy picture as well, with the breakdown of cyclicity with phase 2, bearish phase 1 candle. One thing I'd also just want to point out, folks, is that when trading counter trend using the overlay as a counter trend strategy like this, we're looking for the end of phase 1 waves. We don't trade it elsewhere as an overlay. And also you're looking for the first of those. So there is sometimes occasion to have a second stab at it, but those requirements are pretty strict. Generally, I would say stick to just the first one. All right. If you're looking to trade trend continuation, in this case, of course, it would have worked. Using that approach, then you're not strictly trading an overlay anymore. So that's a subject for another time. So please do be cautious with that. Okay. Folks, as always, if you've got any questions, do pop them into the chat box. And if you're watching this as a recording, you're welcome to use the comments below, and I will get back to you. Right, Euro Swiss, my usual favorite, not obviously, but in this case, if we just quickly look at weekly, remind ourselves that we are coming down to the support level, but it is still inside of the channel. So we're not looking, for instance, for a bearish impulse candle here, as we had there to short this market on a daily impulse, because the weekly conditions are not met. However, on the daily, clearly we're outside of the channel. It's an outside C close as well. But do note that this has not been particularly high quality of movement, and this is pretty typical for the Euro Swiss franc. So I just drew in a couple of potential trades here from last week. Didn't update much, but if you were looking at this one, then what's it? 1, 2, 3, 4, 5, 6. Then actually this trade would still be live using our 3-6 rule on the H4, and you'd have to stop probably above that high. Yeah, definitely above that high there. So yeah, a bit of an interesting one. This is actually starting to look like it might pan out. The preceding one got stopped out at break even. So yeah, you guys know my opinion of Euro Swiss. Euro Cad, similar picture. Once again, back inside of the channel. There's a lot of these. Another overlay there, which was quite a nice one. Just double checking, obviously, just to remind you that on a weekly, on most of these, we really have nothing worth looking at. Euro Aussie, so here we've seen the Aussie dollar weakness showing itself again this morning. Now this one, remember, we're looking at our 4-wave channel. In terms of the 4-wave channel, it is an outside C close. Okay, so we did have that, but from a WM point of view, it's not. Okay, it's an inside C close. So this is one of those examples where trading the channel approach is actually more aggressive than the WM approach. Normally it's the other way around, but in this case the channel approach is a bit more aggressive because we're ignoring the fact that this bearish wave did not respect that as a support level. All right, so dropping down to H4, if you're interested in this, you'll see I actually put this in over the weekend, just to point out that the open of today, which actually was down here, it was a valid entry for a hybrid. So we've seen the breakdown and sequentiality of cyclicity already with Friday closing here. So with a phase two, and that being ringed. And obviously that's also an impulse candle in terms of the H4 time frame. So market open over here, and let's just make sure if you're using standard targeting on this, and we discussed it for hybrid, there are a few options on that, which is something that we will delve into in more detail in the future. The hybrids actually can be used as a triple time frame strategy where we can do our targeting on a higher, but in any case, if we use standard H4 impulse targeting, 104 pips would be your standard take profit on this one. So where are we? Just around there, so close enough. So not that far off of the profit level, and of course 1, 2, 3, we've got 1, 2, 3 higher closes. This stop could already be trailed to that over there, so not quite at break even. In any case, we're probably going to hit take profit before we're able to move that again, although you never know. That's why we move it. Okay, so just another example of that hybrid. And of course, if you're trading H4 impulse, then you need to wait for this low to be ringed, and that would mean that you've just got to wait until tomorrow. The other thing to point out as well is you wouldn't have been able to take that trade unless you stayed up late last night, or you've got the trade manager. Right, Euro NZD, still absolutely nothing doing here. That's just a refrain that we've been talking about for a while, and you can see last week's candle, just another high test on that resistance level. So we just leave that alone. Another example, Gbp Swiss of a breakout, pulling back inside of the channel again. So this also not being a valid M pattern because of the inside C close, both on that and of course on the channel as well. We are potentially seeing this breakdown in cyclicity, not yet, but we could be getting that phase two, which surprise will remind me is a head and shoulders pattern. But I just look at the cyclicity. So yeah, that could well be that, but of course the fact that we are deep inside of the channel would preclude me from looking at that. Gbpk, okay, this is just on a weekly, you'll see very much inside, but it was interesting that we've got this quite violent looking bearish engulfing candle here. And we did have that bullish breakout and very strong reversal. This is the one example of where we actually had phase one. So that's already a false breakout. So there's zero trend here. And you can see that so far it's respecting this resistance level here. So that's one of the most vicious of the pairs from last week, but nothing to do. So that's all good. Gbp Aussie. So Aussie again, weakness coming through this morning. Remember that we have, if I just show you on the weekly, first of all, that we have been in a bullish impulse wave, giving us a breakout for, this will be, well, it's 3 weeks now. This is the 4th week. So we have been looking to trade this on daily impulse, and we've been in a few. So we've discussed this obviously also on the boot camp, but there's a hybrid in here as well as a daily impulse. So either way, these trades are still running live if you are trading daily impulse or if you're trading from weekly down to daily. And today is looking reasonably good so far. So remember, we don't have any expectations around individual results, but this is an example of the premise of our trading strategy working itself out. Okay, Gbp Nzd, absolutely nothing to look at here. All those Kiwi trades basically been dead for a while. Right, so Cad Swiss, another picture looking very similar. You can see this correlation showing itself across so many of our currencies, currency pairs, and that is a perfect example of why we need to be aware of time-based correlation. So that's why we look to limit our exposure to the market at any point in time. And last week, as I say, it was a perfect example of why we do that with these very strong rebounds. But having said that, this is technically still a trend. It's not a valid M pattern, and it's not an outside C close from the channel. So you'd have to be pretty aggressive to look to trade this. Normally, we'd be waiting for it to come outside of that channel. We are looking on the lower time frame again. If you wanted to check your cyclicity over here, it is technically still the bullish cyclicity is still technically intact in the looser form that we use on the 4-hour time frame. But of course, if this high is rings, then that will be the end of that bullish wave. So once again, there's a possibility that we might see some continuation activity. Right, so this trader, well done. You also spotted the Aussie Swiss. We've had also the daily impulse going on this for a while. In fact, this diagram over here, or these markers here, are showing the daily impulse that I think we spoke about before. So 1, 2, 3, 4, 5. Yeah, absolutely. So last week, Monday, we would have spoken about this. That daily impulse actually did go on to hit take profit just before we saw that reversal, that strong turnaround. But for our purposes now, of course, for those of you who paid attention on the bootcamp, we were watching this retracement. It was an outside C close just, but it was. And then if you look for the breakdown and sequentiality of cyclicity in that bullish phase 2 wave, it would have been a setup for a hybrid, which is basically what I showed here. And of course, that would have been shortly after the open of the markets late last night, Central African time, or obviously if you're waiting for the spread impact to come down, maybe a little bit later than that. All right, so that's rolled over nicely, and again, you are welcome to use your 3-6 rule here. We can control that stop already. Okay, so Aussie Swiss example of a hybrid. Aussie Cad, looking here at weekly again, because I just wanted to point out this this bearish engulfing impulse candle, not quite an impulse wave, but it's also showing this this Aussie weakness. And we did get a marginal breakout. Yes, it did pull back inside again, but you'll notice that this movement over here is a lot less violent than what we saw in some of the others. And it looks like we're getting that rollover again, obviously with that Aussie weakness. So just having a quick look at H4, you'll notice that over the weekend, I just drew this in as an example of where we'd potentially be able to put in a hybrid, which you would have been able to do. That bearish impulse candle post the breakdown and sequentiality of cyclicity. Obviously, it opened a little bit lower this morning. So depending on when your spread impact came into line, you would have shorted this market somewhere around here if you were willing to trade inside of the channel. So I'm glad to see that this trader has not done that. However, just a lower time frame example of what we're looking for in that that cyclicity. Aussie Kiwi. So yeah, I mean, you can see that obviously the Australian dollar is definitely still weaker than the New Zealand dollar, as we've seen across the board. But cyclicity not intact. Even last Friday's close, marginally staying inside of the channel. Today, obviously, we're seeing that additional weakness coming through on the Australian dollar. So we will see further bearish movement on this after we had this brief breakdown over here. So in that bearish cyclicity. So that may well be tradable. That is one of the trades, I think, that one of the last winning trades that we had last week as well. So let's have a look here. Oh, yes. So there you have it. That was basically what we were looking at. We had a bullish overlay. The initial stab, it didn't work out on the overlays, but our bearish hybrid, as you can see, could take profit just before turning around. That's using the standard H4 impulse targeting with the daily ATR. But a bit messy at the moment. There's nicer things to trade. Right, here on Kiwi Swiss, we've just saw this support level being respected with that turnaround last week. So again, New Zealand dollar not offering much for us to look at all. Kiwi Cad, another one of those reversals, which came back inside of the channel and been pretty messy since then. That was the first overlay, a smallish winner, about 0.4. So not too bad, but otherwise you can see that, you know, as we went into Thursday and Friday, the market really just started going sideways. And as soon as we, you know, you spot that, folks, all you're doing is you're managing your existing trades to conclusion, whatever that might be, and you stay out of the rest. Right, so that's that. Just a brief look at gold. I'm not sure how much of this I've updated, but in any case, gold on a weekly, we saw that high being ringed very much in the middle of our four-wave channel. So before I do that, just to point out as well that, you know, there's no WM pattern here either for those of you who really like trading gold. And that high being ringed on weekly is represented by this breakdown and bullish cyclicity over here. So looking pretty weak, nothing for us to do. Before I do that, I was talking to somebody last week about this, and they were saying, well, if we're in an impulse wave on the time frame, why not just look to trade overlay? That is pretty much what happened there. We went through a couple of trades here. You'll notice that the H4 impulse didn't actually take profit here on gold. It got stopped out at break even. But as we saw that breakdown, the sequentiality of cyclicity, there was actually quite a nice little overlay winner. So that's just the principle of the overlay, folks, is it's counter trend. You're basically trading against your core strategies so that if they lose, you make a little bit back. So here's weekly on the Dow. So you can see last week just looking quite violent, but it's maintaining those highs. And you can see how it just retested that on Friday. Looking here, obviously, at the S&P, where it did make a new all-time high, very much in a bullish trend here, still on weekly. Non-relevant isolated low formed with this deep pullback last week. So if you are following the spirit of the daily impulse, you know, at no point, you know, were we saying that this bullish wave is over. If you were just looking at the daily impulse, you only look at this time frame in order to identify whether you are in a bullish phase one wave, and then you drop down to the lower time frame. And in fact, that was a setup there. I think I might actually be showing it here. Yes, there we go. So on the daily time frame, you know, not the prettiest, obviously, but that's at the higher close using our 2 5-step rule. Then of course that does mean that currently stops there, and that was a daily impulse. But yeah, it's obviously, given the fact that we're in this bullish trend here, but ignoring the cyclicity on the daily time frame. So there was a breakdown in sequentiality of cyclicity with phase one. Phase one is basically what I'm saying here. So if you're following the pure rules on the daily impulse, then you're into a nice trade. So it just goes to show that sometimes being over analytical about something won't necessarily help you. So it just proves that if you've got a good rule set, you just keep following those rules. When it works well. When it doesn't work, you lose a little. All right, folks. So those are the main ones I wanted to look at. just to point out that the Nasdaq also made a new all-time high through the course of last week. Similar kind of picture, and of course that would have also given you another daily impulse, and this one you'd certainly be at break even. That's even a prettier picture. Folks, I don't see any questions coming through, but before we wrap up for the day, has anybody got a question for me? You want me to look at any pairs again? Looking for clarity anywhere? Right, so Kareem's asking me to take a picture of everybody. So I can certainly try and do that.